Hello, I am Debbie Bird with Briggs Freeman Sotheby's International Realty, and I am here with my mortgage friend Maria Wilder, and we are going to answer some questions. All right, so next question. What kind of money does a buyer need to have at closing?
Great question. I think the easiest way to describe this is I always say you need 3 different buckets of money.
Okay.
And that way then if I can describe the buckets, it will make sense. And it's really funny, I do this with every one of my buyers, and I had this gentleman, he's a veteran, did a VA loan. It's like his 5th or 6th house, and he would call me and say, hey Maria, tell me about bucket number 2 again. So it really makes a lot of sense for people, whether it's your first home or your 20th home. So bucket number 1 is your down payment.
Okay.
Certain loans, you don't have a down payment. VA loan, USDA loan, it's 0% down, which is what you hear. So that bucket is 0. For an FHA loan, it's normally 3.5%. That's in bucket number 1. A conventional loan can be anywhere from 3% as high as you want it to be. So bucket number 1 is your down payment. Bucket number 2 is your escrow account. And that is just a fancy word for property taxes and home insurance. And we have to prepay some of that into bucket number 2. And then bucket number 3 are the closing costs. Title fees, the appraisal, the survey, the processing fee, all of those kind of fees go into bucket number 3. So it's a combination of those 3 is what you're going to bring to closing. And that's what I really want to make sure people are comfortable with. So as we go through numbers to get you pre-qualified, you're going to know about what your house price you can afford, about what your house payment's going to be, and about what your closing costs, what these 3 buckets are going to cost you at closing. None of that will be exact till we get to the very end, unfortunately, but we get it really, really close.
Yeah. Yeah, so, if you think, I've got $10,000 in the bank, so you think $10,000 for your down payment. Well, you actually kind of have to factor in a little bit of the other closing costs into some of those buckets, like bucket number 2 and bucket number 3. You're going to have some wiggle room or some additional on top of the $10,000, or make the down payment just a little bit less. So you work those numbers out, and that's where Maria would come in, and she would help you work those numbers out.
Absolutely. And the money can come from a couple different places. It can come from you, so you can have all of your money. It can be in the bank. It needs to be in the bank. This is not cash in the safe. If you've got cash in the safe, call me. We got to get that money into the bank. It's got to be documented. But the money can come from you. If you've got rich grandma can help us pay. I didn't have rich grandma to buy my houses, but maybe you've got rich grandma. Mom and dad can help. If you're engaged and your fiance is helping out, your fiance can help you. So somebody can help you with the down payment. If you do one of the grant can help you as well. Okay. So, but a lot of people take money out of their 401k. They don't realize that there's a great provision to get money out of your 401k for your down payment.
Okay, great. Limits. So go ahead and ask your questions, and we will get back to you with more videos or a direct answer to your question if it's really specific. Thank you so much for watching today. I hope you learned something new about mortgages and that you are well prepared to buy your next home. Thank you so much for joining me and Maria, and thank you, Maria, for coming.
Absolutely.
And we'll talk to you next time. Bye-bye.
Bye.